Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and we're going to talk about how our portfolios are faring in the first half of 2022. It's been an absolutely wild first half to this year. The stock market's been brutal. And we're going to see just how our portfolios stack up and how stupid we are compared to the average market. We'll see.
Spoiler alert, not great. If you like this kind of entertaining stock market content, we're just two super guys trying to figure everything out. Give us a like and subscribe, and we'll get started.
Two stupid guys trade stocks.
All right, I guess the set the tone here a little bit. Just wanted to show the kind of two major kind of markets in terms of what people kind of compare themselves to. This is the S&P 500 ETF SPY, down 20% year to date. Pretty brutal when you're talking about 10% per year on average gain, right? This is 30% the other direction.
Yeah, and it's going to keep going, too. It's not going to be great, but the important thing is if you're long these stocks and they're decent companies, this is just a buying opportunity. A lot of times we measure in year performance. All that matters is how much money you have when you retire, if it's a 401k, and if it's like another account, it's as long as it's growing. So.
Yeah, exactly. When the price is down, you're actually accumulating more shares, which is kind of the way. If you think about it, long-term growth, that's what really matters. The other thing we talk about here is triple Q. Look at this, down 29.76%. That's down 40% from compared to a typical yearly performance, which is pretty brutal.
Yeah. Tech stocks are getting hit. I have a lot of tech, so.
We both do. So this is my portfolio, the main one I kind of track with this account. I have other accounts, but like this is the main one I actively trade in. Down 17.88% year to date. Hey, you know what? I'm outperforming SPY and doing a hell of a lot better than Kathy Wood, at least. That's something to be proud of.
Ooh, I wonder if we can see Kathy Woods. I didn't think about that.
Yeah.
It's got to be down
Yeah.
like 70% or something.
I think she's over 60% down. Yeah,
Yeah.
year to date. It's pretty brutal. These are the positions currently in my account. I still have a little bit of AbbVie, Baba, as we know. Anyone that follows this channel knows I'm kind of big Alibaba bulls. I've been starting to size into Google a little bit. Altosource is kind of a foreclosure company. I've picked up a few shares of them. I've held on to them for a little while. Hasn't done a whole lot, but I've been selling some covered calls against it. I'm still part of the ape gang. Still hold my one share of AMC. I have not backed down from that promise that I would hold on to that. But what the hell? Bank of America stock here. Still want some of that. Whatever. I had some covered calls against it. Got called away. Berkshire Hathaway. Love my man Warren Buffett. Still holding on to that. Don't really care. Up pretty sizable in that position because I've held it onto it for years. Intel. I've been scaling back on this one a little bit to buy other stuff. Honestly, I sold 50 shares of Intel to buy a little bit more. Buy the share of Google, I want to say. Meta, been still scaling into this one up to 23 shares. What I'm doing is selling covered calls against my portfolio, and every month trying to buy a share of Meta, basically. Organon, this was a little spin-off pharmaceutical company that I thought was relatively cheap on a cash flow basis. And finally, Warner Brothers. Holy crap, did I mistime this one, right? Because like the people that got Warner Brothers shares that were AT&T shareholders only care about dividend. Warner Brothers doesn't pay a dividend. So after that split went through, they just sold it and the stock got destroyed. Went from like the mid-20s down to the mid-teens. That was stupid. Honestly, I still have long-term optimism for Warner Brothers, but that was mistiming on my part for sure. And then these are
I
the
have
current
tons of
options.
mistimings, if it makes you feel better.
Yeah, for sure. These are the current option positions I have. We're going to talk about this Baba one in a separate video because of the what Dylan's calling out on the charts here. But I have a 715, 125 covered call. I went against Altosource, Portfolio Solutions, Apple, and then Intel, still selling covered calls in that Organon and Warner Brothers. So, it's where I can kind of generate a little bit of cash flow into my account in addition to some of my dividend-paying stocks. And I can continue buying a little shares of stocks as prices come down here. It's kind of what my basic philosophy is with how I'm running this portfolio.
Nice.
So, yeah.
So,
talk about yours?
Here's mine. Robinhood does not have a year-to-date function, so I had to do the math. So the chart doesn't make sense because it's just all-time or 1 year. Go Robinhood. So January 1st says at 51,570. July 4th or today, 37,784. So I'm down 26.3%. The largest contributors, fubo, down almost $22,000. So I have like 23 total in it. And then I'm also leveraged 30%. So the good news is that Fubo's down 22, but my year's down 14.
So other positions that help made up for what Fubo has lost to. The scary thing I thought with Fubo is, does it bother you that you could buy like a Toyota Corolla for what you lost on Fubo?
No, because I'm going to quadruple down.
Ooh, that's a bold move, my friend.
No, I'm not. I'm going to hold off on that.
I don't know. Is the dollar cost averaging down or throwing good money after bad? That's a call you have to make for yourself.
Just to be clear, I'm not doing that. That's a bad idea. These are my actual holdings with the cost average. Let me move Vinny's face and my face. So Activision, that's kind of a buyout play. Boeing, I only have 10 shares. Carnival, I only have 70 shares. Bank of America, 100, and then I really started accumulating AMD 40, nvda 30, Meta 55, Baba 200. If you do the math here, you're like, this is not adding up, and that's because options have been making me positive, except for this terrible PayPal fiasco. Unless it's $230 in 2 months, I think I lost like $800 on this one.
Oh, jeez.
I responded to someone. Everyone knows I've been shorting Nikola like over and over and over. I closed all of my shorts after they pushed their meeting back to July 18th. So I'm going to re-enter July 10th. I tried to re-enter a week before. But like, I only have one long-term put. I closed everything to take my profit at 120%. And then TLT, last time I had $3,000 in it and I made $3,000. So I'm doing that again. So really options are keeping me up right now.
Nice. I like it. I mean, they're all interesting plays too, so that I like it. Especially the beat that Nikola to death play. That one's it warms my heart a little bit.
Yeah, I'm gonna do it again. I'm gonna throw another 1,500 or $2,000 as soon as July 10th comes. As long as it's at a good price. I need the SPY to bounce, because as the stock market goes up, as a rising tide, all ships
raises all boats.
There we go. That one.
Yeah.
Because Nikola's not a boat. It's just like a tree on the water or something. I don't know.
It's a little bit of seaweed just hanging out.
Yeah. So the reason why I'm having kind of exaggerative moods is I am at 30% margin. That's kind of where I try to chill. So that's 16 grand. The reason why I'm at it, can you go to the next slide?
Yeah.
So the cost, now this just went up 2 weeks ago. So this is kind of a bummer because it was $2.90 per 1,000. But basically I spend $630 a year on 16K in margin, because the first K is free. I'm probably going to lose more than that on inflation. So to me, it makes sense because inflation's so bad. And then on top of that, I have another 20K I want to put in. I'm just waiting. So worst case scenario, let's say the market tanks tomorrow, and everyone's like, you're gonna get margin called. I can buy that back a couple times. I just am waiting for the right time. So
yeah,
there's not really any risk for me.
I agree. Like the market's down quite a bit, but it's not at a point where I'm like, I need to be buying heavily. I'm just slowly scaling in some stuff when I can.
Yeah, so like I bought 5 shares of Meta, 10 shares of AMD, and 5 shares of nvda in the last 2 weeks.
Nice.
So I'm just slowly going up.
They all have some very positive things for them. That's for sure. I will say that.
Exactly. All right,
guys. Yeah, well, let us know how you're doing so far this year down in the comments. We'd love to kind of chat with you guys about year-to-date returns, because it's always entertaining to see how well people have traded this market, and how many people are just getting utterly obliterated by it, Wall Street bet style.
Yeah. So like I have one Wall Street bets trade, right? Fubo. Don't worry about it. It's fine. Also, I know that everyone's down. Well, probably everyone's down.
Most people
are probably down. Honestly, it has to happen. If you look at a 5-year chart of the SPY, you can't just keep going up, right?
Yeah.
Just learn from your mistakes. That's all that matters. People spend $100,000 on a degree that they don't ever use. It's okay if you spend 15 grand on, a bad stock.
I love it. All right, guys. We'll catch you guys on the next one.
Later.